From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Goes Vegas, but will it move the needle in Washington? Welcome to the early edition of Balance of Power here on Bloomberg TV and radio as Vice President J.D. Vance delivers the keynote address at the Bitcoin conference underway today in Las Vegas. Just as President Trump's media company invests billions in Bitcoin. I'm Mathieu, alongside Kailey Leinz, live in Washington as we keep our eyes, Kailey, on Vegas. Big questions about whether the administration can make good on some of the promises and some of the regulatory changes that the people in that room are asking for.
Yeah, well, we heard the vice president talking a lot about that. He says they're not for regulators, that they want to fire anyone that was thinking like Gary Gensler, the former chair of the SEC. And of course, it's not just the vice president that was speaking at the conference. We've had a number of lawmakers already on the docket, including Senator Cynthia Lummis. Plus, the president's two sons, Eric and Don Jr., also will be speaking in Las Vegas later this afternoon.
It is a family affair, which has brought up questions of its own here, but we're going to keep our eyes on the podium and bring you an important conversation with Congressman Byron, the Republican from Florida, has made his way to Las Vegas. Of course, Florida, no stranger to crypto.
No, absolutely not. And we're looking forward to the conversation with the congressman, who's a member of the House Financial Services Committee. We also, of course, have to ask him about the budget reconciliation package that just passed the House and was criticized by none other than Elon Musk in an interview on CBS last night, saying that the bill can't be both big and beautiful, lamenting the idea that it adds to the deficit, can undermine some of the work of DOGE. And President Trump was just asked about that in the Oval Office.
He was. He didn't have a lot to say about his specific remarks, but we'll go back through that in a bit, won't we?
Indeed, we will. First, though, as always, we check on the markets on this NVIDIA earnings day. Those coming up after the bell. Charlie Pellet has a look at how we're trading ahead of that. Hey, Charlie.
Hi, thank you very much, and good day to you both. NVIDIA shares ahead of earnings, up 0.2%. Bloomberg Television and Radio are going to be all over those numbers as they drop. Complete coverage here on Bloomberg. The Dow, the S&P, NASDAQ all declining right now, with the S&P down 11, drop there of 0.2%. Wall Street halting its rebound, only hours ahead of the highly anticipated results out of NVIDIA. The Dow down 107 right now for the Dow, a drop of just about 0.3%. NASDAQ down 20, a decline of 0.1%. The Bloomberg Mag 7 Index unchanged on the day. The 10-year, 4.48%, the 2-year, 3.99%, and spot gold now trading lower, little change, down 0.2%, $32.93 the ounce. West Texas Intermediate crude, $62.23 a barrel, up 2.2%, and with the big Bitcoin conference underway in Las Vegas, Bitcoin now lower by 1.9%. Earnings news, specifically retailers. Macy's after earnings up now by 2.1%. Abercrombie & Fitch surging 17% after the retailer upped its full-year outlook. Dick's Sporting Goods maintaining its annual sales and profit forecast, a sign of strength as it prepares to acquire struggling footwear chain Foot Locker. Dick's Sporting Goods up now by 1.8%, Foot Locker down by 0.2%. As Kailey mentioned, NVIDIA after the bell up now by 0.4%. Also the big event after the bell, our Ed Ludlow will be sitting down with NVIDIA CEO Jensen Huang at 6:30 p.m. Wall Street time. Again, recapping, stocks lower, S&P down 7, drop there of 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Mathieu and Kailey Leinz.
All right, Charlie Pellet in New York, thank you so much. Joe and I, yes, are in Washington, but we actually have our eyes on Las Vegas at this hour, where the Bitcoin 2025 conference is taking place. Remember last year when it was in Nashville, then candidate Donald Trump spoke before the conference, and today, his now sitting vice president, J.D. Vance, was the keynote speaker, talking a big game about how this administration wants to be friendlier for the crypto industry overall, make it, of course, as they've said often, the Bitcoin capital of the world. J.D. Vance today, Joe, saying, we want our fellow Americans to know that crypto and digital assets, and particularly Bitcoin, are part of the mainstream economy and are here to stay.
So helping us connect the dots between Las Vegas and Washington here, an actual policy from what goes on inside the Venetian Resort to underneath the Capitol Dome, is Byron Donalds, the Congressman, Republican from Florida's 19th, is with us right now on Balance of Power. Congressman, welcome back. I hope things are going well in Las Vegas. Kailey's right. It was Donald Trump's turn last year when he promised America would become a Bitcoin superpower under his leadership. What changes need to happen right now to make that happen?
Well, first, it's good to be with you. The first couple of changes are going to be legislation we're going to be moving through the Financial Services Committee this summer. One dealing obviously with stablecoin legislation. We've been at that for a couple of years now under the leadership of former Chairman McHenry, who's now left Congress, and now Chairman French Hill. And then, of course, our market structure legislation to create the regulatory framework for digital assets overall, to actually have rules to the road where you have regulators understanding what their purview actually is, and unlike what was happening with Gary Gensler, just making up your purview as you go along, because that's how you see that industry. So I think those are steps 1 and 2 for making Bitcoin, as the president talks about, making Bitcoin the United States the Bitcoin capital of the world. You have to address the regulatory environment. You have to create a clear regulatory system when it comes to stablecoins in particular. That will feed the engine for people to bring more investments into the United States. And then that's how the United States will become a true leader when it comes to digital assets.
But is all of that legislative effort, Congressman, and it's great to have you on the program again, complicated by the conflict of interest questions around President Trump, knowing he has a meme coin and attended a dinner last week with investors in said meme coin, that DJT, the media company that literally bears his name, is raising money so that it can buy Bitcoin. Does that add a complicating factor to any kind of bipartisan effort in advancing legislation like that, when that's giving Democrats a lot of noise to make?
No, I don't think so. There's a lot of Democrats on Capitol Hill who do realize that digital assets are here to stay. Bitcoin is here to stay. It's not going anywhere. And so it's time for the United States to actually take the necessary steps forward to fully embrace digital assets. And so I think what's going to happen is we're going to move that policy out of the House. There are going to be Democrats, in my view, who are going to support both packages in the House, and you're going to have Democrats in the Senate support it. I think what you saw, and I think Democrats saw this by and large with how they acted towards the digital assets industry under the Biden administration. And, if you're here on the conference, it was soundly rejected. I think people here understand that you have to have clear rules to the road. You can't have regulators just picking and choosing how they're going to look at digital assets. You simply can't. So I think that, to your question, I don't think that's going to matter at all. We're talking about an industry that it really has the potential to be $1 trillion industry here in the United States. And not just to talk about the guys who are doing big things, whether it's Coinbase or any other company that's out there. Talk about the little guy, people who are getting in at the bottom of this industry, who are finding an opportunity to really build a company, really build wealth. That crosses party lines, it crosses demographic lines. And so we need to lead on this and not be afraid of talking points or other things that are going on.
But as we consider building wealth, what if all of this effort directly leads to further building the wealth of the President of the United States? Do you not see an issue there, Congressman?
Look, I would tell you that a rising tide lifts all boats. If Eric and Don are doing things in their personal capacities, that's fine. And that's all well and good. That's America. I don't think people should be told that you can't do business in our country. I will actually, to be blunt with you, it's better that these things are actually out in the open for people to know and to see, as opposed to what was happening under the previous administration, where they were hiding how the family was making money. They were hiding it from everybody. They were lying to the American people. The President Biden, or the auto pen, whichever one you choose, had to do preemptive pardons. That stuff is ridiculous. That's outrageous. What we're talking about is regulating an industry in a proper way so that industry can thrive, it can grow, people can invest, capital can be raised, and people, whether you're at the top or the bottom, can get in. One of the things that I'm so excited about digital assets is that when we finally get the regulatory environment settled, you can do things like fractional exchanges, where people can buy a fractional piece of real world assets or a fractional piece of companies going forward. So if somebody doesn't have, $50,000 to their name to invest, and they might have a couple $100, they might have $5,000 under a fractionalized tokenized exchange, you can invest in that. That helps people grow their asset base. It helps them grow themselves financially in our country. That's a good thing. We should celebrate that.
Congressman, I want to ask you about the effort on Capitol Hill that you're in the midst of right now when it comes to reconciliation of the Trump tax cuts, the spending cuts. and all the rest that comes with it here. Kailey mentioned a moment ago that the president was just asked in the Oval Office about comments from Elon Musk about the way this bill took shape in the House and is now, of course, on its way to the Senate. Let's listen to what he said, and we'll have you react.
I was disappointed to see the massive spending bill, frankly, which increases the budget deficit, not just decrease it, and undermines the work that the DOGE team is doing.
I actually thought that when this big, beautiful bill came along. I mean, everything he's done on DOGE gets wiped out in the first year.
I think a bill can be big or it can be beautiful.
It can be big or it can be beautiful, Congressman. That was with CBS. Is Elon Musk wrong?
Well, look, a couple things. One, in the package, obviously, we maintained all of the president's tax policy and made a lot of it permanent, which is to the betterment of every small business owner, every American. We secure the border. We actually build border wall. We modernize our Defense Department. We do a lot of things that have been neglected, especially over the last 4 years, that need to get done, and we were able to accomplish that. When it comes to spending cuts, yeah, Elon's right on this. We have to do a much better job in making sure that these bills are at a minimum deficit neutral, but what they need to do is decrease deficits. And so that was a major sticking point for a lot of conservatives in the House. They want to see real spending cuts in these packages. I know that there's a rescissions package that the House has in their possession. We need to move that to the floor and do that immediately. A lot of the DOGE cuts are in that rescissions package. We should be voting on that. At the end of the day, before you get to bills or how any of that looks like, I look at the bond market. And one thing is crystal clear. The bond market is looking at the United States and they are saying, you better get your fiscal house in order or we're going to charge you more to borrow money. No nation can thrive under that kind of a scenario. So we have to be serious on Capitol Hill. Last thing I will say is the president and his team, they did a tremendous job of trying to get this bill through the House. Some of the sticking points on why we didn't cut more spending was because of Republicans who, to be blunt, were concerned about their reelections in their districts, as opposed to making sure that we put the fiscal health of the nation forward and have that be the number one thing we're concerned about. So I think that as this bill goes through the Senate's going to make changes. It will come back to the House. And then for future packages, I'd urge my colleagues, we have to take our deficits and our debts seriously. Because if we don't get this under control, the bond market is going to come for everybody. I don't care if you're a Republican or Democrat, it does not matter. The bond market charging higher rates for Treasury bonds is going to be a major issue that really could hurt the United States over the long term, if not sink us.
Well, on the bond market, Congressman, White House trade advisor Peter Navarro just penned an op-ed about that today in The Hill, saying that the bond market is wrong about Trump's tax bill. It misses the substantial positive revenue impact of tariffs. What's your take on Navarro's argument?
Well, I agree with Peter when it comes to the president's tax policy and even some tariff policy. Yes, those are revenue raisers, and I would argue that when you get out of frankly, the negotiating around what the economic growth rates are going to be on Capitol Hill, that was a negotiation. It's not about what's going to happen. I think things in the president's tax package, obviously Section 199A being continued and now permanent, 100% expensing over 4 years, no tax on tips, no tax on overtime. I think all those things are going to be stimulative to the economy. But I think what the bond market is really talking about is our deficits and our debts and the velocity of borrowings into the future. That's what we have to get under control. I would argue that if the bill was deficit neutral coming out of the House, Moody's would not have downgraded. I'll tell you that right now. I don't think they would have. And so I think that those are the things that the bond market is looking at. It's not tax policy. Peter is correct when it comes to tax policy. Totally agree with him on that. But the bond market is looking at the deficit projections, the debt projections of the United States. We have to take this stuff seriously. There are real reforms that need to happen in Washington, D.C. And so that's the stuff that when you look at future pieces of legislation, when it comes to deficits and debts, that's the stuff that we have to get serious about.
This is fascinating for us to hear, Congressman. In our remaining moment, are you quietly hoping the Senate cuts spending further when it gets its hands on the bill?
Oh, yeah, of course. Listen, I am all for cutting spending. And look, let's be clear on this. I know that there are a lot of Americans who say, well, if you cut spending, is that the thing that I use? And I would tell you that the federal government wastes so much money we could actually do more when it comes to spending and actually not hit vulnerable populations. I'll give you an example. There was a lot of conversation around Medicaid in this bill. The Democrats are saying that, oh, Medicaid is to pay for tax cuts. That is a lie. That is simply not true. The reason why it's a lie is because when the Democrats were in charge, they did not touch Donald Trump's tax policy. They left it in place because it's good tax policy. So what the real argument is, in Medicaid, should the federal government be spending $9 for every $1 that a state spends on able-bodied adults with no kids, versus the same federal government paying $1.33 for poor kids, elderly people who are poor, and pregnant women? That is a dichotomy set up by Barack Obama and Obamacare. And it's terrible policy, because what you've done is you've expanded the Medicaid population for able-bodied adults, and you're actually disincentivizing state systems and hospitals from serving the most vulnerable. So there are positions on the Hill that said, look, let's try to rework some of this stuff. Let's do more investment into poor people, vulnerable populations. Let's actually try to take a stab at rural health and some other issues that are happening in the country. But we have to end this Medicaid expansion fallacy around essentially creating expansion populations around Medicaid. You have to end that. One of the big reasons the Democrats want to keep Medicaid expansion is not for health care, it's because they want single payer health care. That was the reason they wanted a public option back when they did the Affordable Care Act back in 2010. That was the purpose of that. So there are conversations like that happening on Capitol Hill, where you can make changes to a program like Medicaid. You can make sure people who are on those programs are grandfathered in, their benefits don't get cut. But going forward, the federal government says, we're not going to be funding able-bodied adults going forward into the future. We're going to make sure we prioritize vulnerable populations, people who are truly in need. That's the kind of spending reform that I think the bond market would say, you know what? They're being serious. That's also the type of spending reforms that I think the American people will get behind, because they'll be like, that makes sense. We should be making sure that people who are truly vulnerable get the help that they deserve.
What about people who are vulnerable to the elements, Congressman? And I ask you this knowing you would like to be the next governor of Florida. Are you worried that funding cuts in areas like FEMA and elsewhere, as we head into Atlantic hurricane season, could leave states like Florida more vulnerable in responding to disasters?
Well, look, I think that what you're going to see is the reworking of FEMA, which is something I have advocated for. I filed a bill with Jared Moskowitz, Democrat out of Florida, about getting FEMA out of Homeland Security, having it being a direct report agency to the White House. So I think I commend the White House on what they're doing. President Trump is leading on this issue, making sure that FEMA is reformed. So I'm not concerned about that. Knowing the president, knowing his team, they're going to be there to make sure that people are getting every help that they need and they deserve from the federal government when disaster strikes. So I have no concerns about that. But you do ask the real question about FEMA. FEMA is a bureaucratic mess, and it has been for quite some time. Go ask the people in North Carolina, they will tell you. Ask the people in the Panhandle, Big Bend area, Southwest Florida, my district, they will tell you this. So FEMA needs to be reworked. I commend the president for what he's doing. Let them go through that process. But I will tell you, Americans, Floridians, they're going to get the help that they need when disaster strikes from Donald Trump.
All right. Florida gubernatorial candidate and current Republican congressman representing Florida's 19th district, Byron Donalds. Thank you so much for joining us here on Balance of Power, live from Las Vegas, where Bitcoin 2025 is underway. We'll have more on crypto and its ties to this White House and this president later on the program. And our political panel will join us straight ahead. Rick Davis and Jeanne Zaino will be with us here on Balance of Power on Bloomberg TV and radio.
Thanks for joining alongside Kailey Leinz. I am Joe Mathieu in Washington, where it's back to the future at the White House. Kailey, at least when it comes to Fannie Mae and Freddie Mac. You may feel like you've seen this movie before. Donald Trump says he's working, that's the quote, on taking Fannie and Freddie public, adding more to suggest the government will retain guarantees and oversight for Fannie and Freddie if, in fact, they are taken public. The question is, how do you get it done?
Yeah, that if is a big if. And how you get it done is a question we pose now to Ben Elliott, Bloomberg intelligence analyst for financials, who is here with us in our Washington, D.C. studio. So, Ben, obviously this idea isn't anything new. In fact, it's something that many Republicans have long advocated for since these went into government conservatorship after the financial crisis. But how hard is it to actually implement? What would it actually even look like?
Yeah, so it's an incredibly hard process, right? The Trump administration had 4 years to work on this, and they didn't accomplish a whole lot at the end there. But they have all that work on the shelf. They could pull it down, and they could speed up the process this time around. I think the markets today, you saw the price action on Fannie and Freddie, very positive. I think that's a response that investors are happy to see that the government would still have a role in housing finance. But actually, the process of determining how that guarantee will work is much more complicated than just a post.
Well, that, I guess, is the question here, right? Do we have anything comparable? Is there an example of how that would work, and how much oversight would Wall Street withstand?
Yeah, so there are analogs for how the government would exit its stake. You know, the federal government made a ton of equity investments in the wake of the financial crisis. Yeah, right. AIG being sort of the biggest one that everyone remembers. Sure. And the government could follow that playbook to get out of its stake in Fannie and Freddie. But there's no analog for you know, the role that GSEs play in housing finance and providing a fixed rate 30-year mortgage to U.S. home buyers. So that remains to be determined, and it's very complicated.
Well, and to that point, what could happen to mortgage rates themselves if we were to see the government offloading Fannie and Freddie? Is there a risk that actually costs to buy a home could go higher?
Yeah, so if you look at the sort of spread of agency MBS over Treasury, it's really moved very little as a result of the president's latest post. So I think that indicates that the bond market basically assumes there'll be no change in how the securities are perceived. But, you know, if more credit risk were to come into the agency MBS marketplace, then the securities would have to price higher, and that would be reflected in mortgage rates.
Really interesting, and it's something that we'll keep tabs on for you here. Ben Elliott with Bloomberg Intelligence. Great to have you with us, Ben. Don't be a stranger on Balance of Power. As we assemble our political panel, Rick and Jeanne are both with us, Bloomberg Politics contributors, with our eyes on Elon Musk and some of the commentary that he made in a series of interviews, not only about the DOGE, but about the president's big, beautiful bill. Jeanne is Bloomberg Politics contributor, Democratic analyst, and senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, our Republican strategist and partner at Stonecourt Capital. What do you make of this, Jeanne? Elon Musk says the bill can be big or it can be beautiful. Apparently, it cannot be both. Has Donald Trump lost the man who ran the DOGE?
He seems to have. And, you know, I was thinking, boy, that was quick. It was like literally over the weekend. He was truthing. No, not he doesn't truth. He tweets, Xing, I should say, about he was going to spend 24/7 at work. He was going to be sleeping on factory floors. And then all of a sudden he's back in sort of sounded to me a little bit like an exit interview bemoaning what is going on in Washington, D.C. I have to agree with him on the bill. I don't think it's I don't think it's beautiful. I do think it is very big, and I think he is right on the question of the deficit and the spending. So I agree with him on that, but I imagine his investors are not happy that he's not sleeping on those factory floors like he promised.
Well, of course, it's not just his investors that seem to have paid attention to his comments. The Speaker of the House seems to have been responding as well on X today, Rick, as he says Elon Musk and the entire DOGE team have done incredible work, and that the House is eager and ready to act on DOGE's findings so we can deliver even more cuts to big government that President Trump wants and the American people demand. He says the two ways of doing that are acting on a rescissions package when the White House sends it to the House, and then using the appropriations process to swiftly implement the president's 2026 budget. Does the Speaker have a point that actually this one big, beautiful bill is not supposed to be where we see spending cuts materialize, that has to happen separately legislatively?
Well, it can happen separately legislatively, but the reason you use reconciliation is because it's easier to do. You don't have to have a 60-vote majority in the Senate to pass. And so if you're going to go deep with the knife and cut government programs in excess of what the House attempted to do, then where are you going to get the votes for it? You barely had the votes to pass the big, beautiful bill, and now everyone's out criticizing it for not actually having cut enough. Chip Roy must be doing, a dance in the House floor right now because he's been saying that for a month. And so when we heard Byron Donald start talking about earlier on this program how, he's really feels frustrated by the inability to cut more into the deficit. I mean, he was voting on this bill. You could have stopped it and gone back and cut more. Now, as soon as the bill is sent to the Senate, it's like, well, the Senate needs to cut more. I mean, it's really unusual for Washington to play this dance. But look, the good news is everyone's focused on trying to cut that deficit, and I do think that's a high priority for both the Trump administration and Capitol Hill.
I did have to wonder, Rick, how many times in your years in the Senate you heard somebody in the House hoping that the Senate would cut further to make the bill better. But, we're also concerned about Elon Musk's feelings when it comes to the DOGE, Jeanne. He did a couple of interviews. There was another one with the Washington Post in which he talked about the DOGE as a whipping boy for everything. Quote, so like something bad would happen anywhere and we would get blamed for it even if we had nothing to do with it. And we know that Elon Musk was bumping into members of the cabinet just like he was lawmakers and members of the voting public. But if you're swinging a chainsaw around on stage at CPAC, shouldn't you expect to offend somebody?
You would think, right? It sort of reminded me, as good as he is at business, or brilliant as he is at business, he's very, very new to this Washington, D.C. game because he was surprised that he was being criticized, or what he said, blamed, and DOGE was being blamed. And of course, that suggests somebody who hasn't spent a lot of time in Washington, D.C. Even Donald Trump today in his comments tried to say, listen, Elon, we'd like to do other things, but the reality is we need to get enough votes for passage. And so, I think Elon Musk sounds a little bit naive sometimes when he talks about either DOGE or the cuts and these kinds of things that are going on in Washington, D.C.
Well, when he's talking about these things going on in Washington, D.C., knowing he's about to spend a whole lot less time in Washington, D.C., Rick, is this actually when we see honesty coming into the picture?
Well, I don't know if it's honesty. I mean, maybe a little naive to think that you were going to go to Washington with the chainsaw and not, ruffle some feathers. But since when did Elon Musk ever care about ruffling feathers? He's been ruffling feathers since the day he was born. And thank goodness he has. He's upended the space launch industry. He's got so many other inventions that are revolutionizing technology. I'm more concerned with the fact that he's now feeling like he's got feelings. And all of a sudden, because the DOGE thing didn't quite work out, so what? I mean, rockets blow up and you keep working on it. In Washington, you need to sort of pick your friends. And so in this case, I think, someone needs to sit down with Elon and say, look, your friends, the Trump administration, their followers, probably very happy with what DOGE accomplished. Rest assured, that will be your legacy in Washington. Keep moving, launch some space, and look, save a seat for me to go to Mars. I want to be an interplanetary species.
I love that, Rick. I guess you're just going to have to wait until longer than next year. Jeanne, is this a concerted PR campaign to distance Elon Musk from all things Washington?
Yeah, it absolutely could be. I mean, it wasn't that long ago we were talking about the fact that everything he had done on behalf of DOGE had alienated the big base of his buyers for Tesla. And so how do you get those back? And of course, the numbers are really suffering. You distance yourself. And we've seen him do that on tariffs already. We're seeing him do it big time when it comes to the issue of reconciliation. So I do think there might be some of that going on here. And of course, also the fact that he, has long been disenchanted with Washington, D.C., and the fact it's now being run by the Republicans and Donald Trump's hasn't changed any of his feelings about it because, of course, Washington hasn't changed. Granted, it's only been 30 days.
Well, yeah, that's true. Who's still counting at this point? I think it has been like 130 days, right?
That's Friday, I believe.
End of April?
Well, I guess that's true. Elon's 130-day mark is Friday.
Yes.
End of the contract.
End of the special government employee status. Rick, in our final minute here, what happened to the DOGE caucus in Congress? Is it them that have to kind of take the helm going forward here? Or have we all resigned ourselves to the fact that this effort is maybe a lot easier to talk about than to actually implement in reality, especially when it comes to congressional rescissions?
Yeah, well, we see now there's sort of a remake that DOGE is going to focus on upgrading and modernizing the computer systems in government, which they desperately need to do. So if it becomes something like that, which could be fruitful for taxpayers and for those getting benefits from the administration, then I think that would be a good sort of second act. We know that there have been discussions about, like, gosh, why can't we operate the federal government like American Express? And, you get things done in an easier way. But at the end of the day, I think that you're going to see sort of a limitation put on DOGE, because at the end of the day, it's hard to get your job done if you're in Congress, and to then have to deal with things like DOGE just is a massive distraction. They're the ones who have to cut the budget. They're the ones who have to create these programs, not an outside entity.
And Rick and Jeanne are the ones who have to answer our questions here on Balance of Power. Our political panel today, Rick Davis and Jeanne Zaino. Thank you so much. And we have more of the program straight ahead as we sit down with the Atlanta Mayor, Andre Dickens, next on Bloomberg TV and radio.
We thank you for joining on Bloomberg Radio, Bloomberg TV, on YouTube, and Bloomberg Originals, as we try to connect the dots on the debate here in Washington about tax and spend with what's happening in local and city governments, statewide governments as well, for that matter, all over the country, downstream, if you will, from the decisions that are being made here in the nation's capital. As Kailey, Leinz, and I look forward to talking with the mayor of Atlanta. Kailey, we've heard a lot of questions and asked a lot of questions about the impact of cuts to Medicaid, the SNAP program, food stamps. And it's an interesting equation for a mayor who doesn't always have the flexibility to deal with debt and deficit spending the way we do here in D.C.
Certainly, and considering that the federal government policies that are affecting cities like Atlanta don't just end with potential cuts, but also cuts they are making to things like the Centers for Disease Control, for example, elsewhere that actually could directly impact the Atlanta economy. So it's on that note, we do now turn to the mayor of Atlanta, Andre Dickens. Mr. Mayor, thank you for being with us here on Balance of Power. As you weigh all of these different policies and the cutting policies in particular that are coming from here in Washington, D.C., how are you feeling it at home?
Yeah, at home, it's a little tough for everyday Atlantans, which are everyday Americans. When we have tariffs that have increased the cost of goods, whether that's at your grocery store or at your hardware store, or the cost that it takes us to produce an affordable housing unit. These things have increased under Donald Trump. And it also affects us right here at home because the CDC is headquartered here in Atlanta, and thousands of people have been laid off. And not only CDC workers, but other federal workers that work in various departments of HUD or in NIH-funded medical technology and research operations here, whether at Emory or at Morehouse School of Medicine, et cetera. So there's a lot of people that's looking for work because of layoffs and DOGE cuts in the city of Atlanta. And so we try to help them find new employment and for their skill set. And then also, just thinking about how there were projects that we had that we were looking forward to receiving the funds for, but those projects have stalled. The funding is questionable at this point due to various departmental cuts at transportation or at HUD.
I'd be curious to hear, Mr. Mayor, it's good to have you back, what programs are on ice because of this? And do you have the resources, the money, the programs to help these people who are in transition, who have been laid off at, for instance, the CDC or somewhere else in Atlanta?
Yeah, so some of the things that get very close to affecting us is around our transportation dollars, things that we have won, we've been awarded, and some of those came under the Biden administration, and they were for reconnecting communities. They were for various type of projects that might have had equity involved or sustainability involved. The IJA, for instance, these things, or the IRA as well, the Inflation Reduction Act, these things came under Biden, and so now they've been kind of stalled, and we don't know the future of these, which is tough to operate under, which is a project that we bid on, that we were hopeful to win, and they would provide a tremendous amount of connectivity for the city, and they are questioned at this point. So we haven't gotten an official letter that is no, but it's definitely these various grant projects have been put on stall, been stalled. And then so when you think about all of the above, as a mayor, we still have to operate under a balanced budget. That's our mandate.
Right.
I can't go into deficit spending, et cetera. So we have to balance our budget, which means either we have to make adjustments to our personnel or make adjustments to our service delivery or raise taxes, which of course is a last resort. So we are in our budget talks right now. We're on a fiscal year of July 1 through June 30th, and it's tight, it's tough. Luckily, over the past 3 years, we have a tremendous amount of reserves, and we have a AAA credit rating. So we're very proud of our financial standing. It just puts more burden down at a local government level.
Well, as you raised it, Mr. Mayor, are you expecting to have to do any more layoffs as you look at your budget?
Hopefully not. We are in good position right now. We did do a hiring freeze, and basically out of 9,500 employees in the city of Atlanta's employment, we basically said no one can be hired unless they get authorization from myself, the COO, or the chief of staff. And that was to make sure that we looked at every single necessary position, look at any kind of vacancies that were in departments, because we want to make sure we deliver the services that we've been known for delivering on time and on schedule and on budget. And so we're still doing a good job, but we definitely are watching every dollar out the door and every dollar in the door, because we know that we won't have a lot of backing from the federal level that we can depend on with certainty. Some of these policies, they get called up on a Monday, and then by Friday it's altered, it's renegotiated in some conversation in Washington. And so we don't want to make a knee-jerk reaction to anything, because literally 24 hours later, something that has been said in a social media tweet or post can be changed 24 hours later or 48 hours later. So we have to just kind of wait and see what's going to actually be real, what's going to be codified, what's going to be legislated by the senators and the representatives via the White House's ambitions.
Well, Mr. Mayor, I'm trying to look over your shoulder there at the skyline to find the stadium here, the Mercedes-Benz Stadium, where you're going to be hosting a couple of World Cup games, actually more than a couple next year. How do you prepare for an event like that when you've got a hiring freeze and funding is in question?
Yeah, well, we're going to be very prepared for FIFA World Cup. Atlanta does big events well. We've handled the Copa America the same night that we had the CNN presidential debate between Biden and Trump. The same day, literally, and we've hosted multiple Super Bowls. So we'll be prepared. We have about 700 police officers that will be working from the city right there for those each one of the event nights that we have. So we have 8 matches that we've won for the World Cup. So each of those 8 matches for the day before and the day after and the day of, we'll have 700 Atlanta police officers plus 200 to 300 more officers from surrounding jurisdictions. We have our mounted patrols that are here, the horseback. We will be prepared. We have enough officers. We definitely have done a good job since the pandemic of increasing the amount of officers that we have. We increased pay. We have a new Atlanta Public Safety Training Center that's really making them more prepared to do community-based policing. And so we are going to be prepared from a safety and security perspective. We even came up with this idea that I have called Showcase Atlanta, where not only are we just going to have folks go to this huge sporting event, but we also want them to get outside of the sporting event and go to the museums, to the art galleries, go to the restaurants, go to all the various communities around the city of Atlanta to be able to enjoy what Atlanta has to offer. So showcaseatlanta.com is where people are going to find out what local businesses and dining they can enjoy. So we'll be very much ready for that and we're hopeful that the federal government provides the funding that it said it will provide to all of these World Cup cities. Canada's cities have their money, Mexico's cities have their money, and American cities are waiting till August, September to be able to know what amount we will receive. Atlanta has the second highest most games, so we're hoping that we get an adequate amount of funding to support this. If not, we'll still do a good job, but we'd love to be supported and not have to put cash out of our pockets.
come back and talk to us when you find out. Sounds like a massive production. And we're glad you could be with us in our Atlanta bureau, Mr. Mayor. Thank you. Andre Dickens of Atlanta. Great conversation with us live on Bloomberg TV and radio. I'm Joe Mathieu alongside Kailey, Leinz, where we're counting down to Fed minutes. And with us in Washington, Enda Curran, Bloomberg's global economy reporter. Enda, what are we bracing for?
Well, if you recall at the time, the Fed didn't move rates a few weeks ago, but they said unemployment could go up and inflation could go up. So there were some warnings in that. So we're looking for details in terms of how worried are the officials? Do they see a significant material hit to growth? How worried are they about the jobs market? Now, there are a couple of qualifiers that has to be made clear. Chairman Powell used that press conference at the time to make clear the economy is still in good order. So they weren't certainly panicking. Officials have said they're not in a rush to cut rates. But most critically of all, these minutes are from the meeting before the big pause went in on the tariffs from China. So kind of a little bit of ancient history, really, truly speaking. So we'll have to read the tea leaves, see how worried they were before the big pause on China.
Yeah, the nature of this being backward-looking is something we have to consider. But could it have implications for the forward outlook as we look ahead to the June meeting or July and the idea that maybe the Fed's not going to be ready to cut at those meetings either?
I think it will. I mean, much will depend on what signals will come out of these minutes in terms of how worried they are about the economy. I mean, things are okay now, but how much of a slowdown could they see coming in the months ahead? How worried are they about the labour market? Now, if the minutes today suggest that they're broadly speaking in a confident, comfortable place, but they remain vigilant, well then you would imagine traders will say no hint of a near-term move by the Fed. So it's a question of just how, what signals these minutes send about how worried they are. But as I say, it's complicated because the tariff story keeps changing.
Wow. So this is a pre-pause Fed, backward-looking. We've established all of that. So how alarming could these comments be? That was a dark time when this happened.
Yeah, I think you're right, Joe. I think in truth, a lot of it will be framed through that. I mean, people will look at these, traders will look at these minutes and go, wow, so this is what the Fed was thinking.
Yeah, good thing we didn't have to do that.
Yes, and then they'll have to kind of subtract, well, what are they now thinking without these minutes, without the tariffs in China, where they are. But since the minutes, the meeting, we've had several Fed speakers, which is more up to date, and broadly speaking, their messaging has been the economy's okay, they're not in a rush to cut rates. But maybe at some point that moment might come. So we have had more recent communication from the Fed since those minutes.
Well, and we've had more economic data as well. We have more coming down this week. We get the second read on first quarter GDP tomorrow, PCE on Friday, along with personal income and spending. We have a jobs report coming up next Friday. And how critical will those prints be?
I think the jobs report next Friday will be very important because that will give a read in terms of, say, May will be the first full month since Liberation Day when we've had the tariffs. Tariffs are flying in all different directions, but nonetheless are causing disruption. So May will give us a read. Okay, is this impacting on the ground at all? Remember the inflation story, people say it's not yet showing up in prices.
Yeah, right.
But economists say, hang on, you've got to give it a few months. So jobs will be interesting. But more broadly, I will say that it'll take a couple of months to get a clean read on how all of this is impacting.
Is this Trump data yet or Biden data?
Well, I think the White House was... If it's good data, I guess it's just data.
I thought that might be the case. Are we done talking about Jay Powell's job security after the Supreme Court weighed in?
Well, it's gone quiet for now, and that was a very interesting judgment. But we know, of course, the president has his particular views on interest rates. So I would imagine it will continue to be an ongoing theme in terms of where he thinks monetary policy should be versus where the Fed thinks it should be in the months ahead.
Yeah, well, it'll be interesting to see if President Trump weighs in on the minutes today, like he seems to every rate decision. I just quickly, Enda, do we expect that the Fed will have had any conversation around the bond market in particular and some of the fluctuations, in part because of tariff volatility that we have seen within it?
I'm sure they have discussed, financial markets. They'll be eyeing that volatility very closely, but they haven't signalled any concern about what's been going on there either. Like they haven't signalled that the volatility is in excess of what it should be.
Right.
So it would be surprised if they were to say something new on that.
Yeah, as long as the market is still functioning, I guess they see no need to get worried or intervene. Enda Curran covering the economy for us here in Washington. Thank you so much. And it was interesting earlier this hour when we were joined by Republican Congressman Byron, who sits on the House Financial Services Committee, that he specifically called out the bond market and actually, Joe, seemed to suggest that Moody's in downgrading the credit rating of U.S. sovereigns had a point, that Capitol Hill is not doing enough on spending.
I was fascinated by that whole conversation, actually. I feel like we need more time, and by that I mean longer interviews with Byron, because we covered a lot of ground, and it was a fascinating bit of insight from a Republican talking crypto in Las Vegas, knowing this debate is taking place at home. We'll meet you back here on the late edition of Balance of Power with a lot more to talk about. Standing by for the Fed Minutes. We'll take care of that in Bloomberg Business Week Daily. With Kailey Leinz, I'm Joe Mathieu. Thanks for spending some time with us on Bloomberg TV and radio.